Welcome to Herzl's Law, Lessons Learned from the Surfside Condo Collapse. Obviously, this was one of the most terrible tragedies in condominium history. I'm not going to pretend to know that I have all the answers or that I knew everything that happened there with the board. But I do think in just kind of reviewing everything that happened, there are some important takeaways that would be helpful and action items that you could take away from this so something similar doesn't happen to you. Unfortunately, here in Michigan, we are not near the ocean. We don't have the issues with salt water, but I have dealt with a lot of different condominiums that have had different types of issues and other types of similar disasters, not necessarily to the scale, but ones that have had water issues because they're near lakes or rivers or rains. Occasionally we get a tornado here. There was a condominium where there was an explosion or there's been major fires, we've seen throughout the year. So a lot of these principles are going to be applicable to any kind of disaster situation, some of which would be preventable through maintenance, which is going to be one of the main topics that we're going to address here. Anyways, I'm Kevin Herzl, the managing member of Herzl Law, and my goals for today is I'm going to take you through the financial planning aspect of this. We're going to look a little bit about how the board may be budgeted, what you can do with respect to maintaining reserves, loans, how that's all supposed to work for long-term maintenance in an ideal scenario. The second topic I really want to hit on is inspections. What's the difference between a reserve study and an engineering report, when you should get those, what they are, how you should use them. Third point is basically liability for everybody involved. So there was a lot of finger pointing in the aftermath of this, but I think there's probably some accountability, maybe not necessarily legal liability to go around between the co-owners, board members, the developer here, the property managers, the vendor, and even the municipality was involved in this one. So I'm going to kind of take a look at what everybody's role in this is and how you may be able to avoid some similar situations that they found themselves in. And lastly, I want to tackle document amendments and just a few ideas on things that you may want to take out of your documents and things that you may want to put into your documents in order to address some of these situations and make it easier for you to operate your condominium. And then finally, I'm going to just kind of wrap up with my final thoughts as to some key action items that you'll be able to hopefully take away and use in your associations here. So the first thing that we're going to tackle here is financial planning. So one thing I wanted to start with here is, for all the board members, is this is the first paragraph of the letter that was sent out by the Surfside board. And as you can imagine, most people would not be thrilled either as a board member or as a co-owner to have to send out a letter that says we are going to have to discuss a $15 million assessment. So the question is how did they get to that point? I mean, I think it's pretty evident that if you need to do a $15 million special assessment related to maintenance items, that there were certainly planning issues involved here. So we're going to take a look at that a little bit. And the first aspect of this is going to be the budget. So one of the things that I think was flawed in this situation here is that people need to view the budget as an estimate. That's what it is. Things happen throughout the year. There is going to be unaccounted for maintenance. So you may estimate that something happens, but if something in reality is different than that, you need to be prepared to deal with that. And you should, try your best to deal with it in the course of the year or make a plan to do that over time. So keep in mind that when you are doing budgets, if you have major repair and replacement or things that come up during the year, don't just stick to your budget and ignore that and put your head in the sand. The second tip that I would recommend here is work backwards. I see too many boards basically say, I want my assessments to be $250 a month and we never want to raise assessments. Well, I got news for you. That makes it almost impossible to operate a condominium successfully. Reason being, each year the cost of insurance goes up, the cost of salt goes up, the cost of landscaping goes up. Really what you need to do is work backwards and figure out, what you should be doing is what's the actual cost of operating the condominium, what that's going to be projected. And that's going to, then you divide that amongst the owners, and that's what's going to determine the assessment. as opposed to trying to work forward and say, well, what can we afford for $200 or $250 a month? So when you're making your budgets, the key is really to figure out what the projected costs are first, as opposed to be married to some sort of number. And we'll sort of get into how to deal with the owners, because I'm sure none of you have gone to your annual meetings and the co-owners said, we're thrilled that you've raised assessments on us this year. But we'll sort of talk about that and how to deal with that too, because I've been doing this long enough to understand that that is the reality of the situation as well. When you're dealing with the budget, I just take a look at your documents. It's very rare, but in most cases, this is something that is done. It's approved by the board. Typically, the property manager will come up with an initial draft. If you're a managed community, they'll present that to the board, have some discussion, and approve that. If you do have, it's very rare, but if you do have provisions in your documents that require co-owner approval of the budget, I'd highly recommend that you try and amend those out. I'll just tell you right now, one horror story that I had several years ago with a condominium is that it required approval of the budget by a majority of the co-owners. Problem is, they couldn't get enough people to actually come to hold a meeting to even have quorum. So what ended up happening there is they still had to provide services, but you had half the condominium paying assessments and the other half not paying assessments. And then you had some people on the board paying assessments and other people on the board not paying assessments. And that ultimately led to fights over who was eligible to be on the board, who was eligible to vote, a group of people getting put into collections. And it was just a huge disaster, and it ended up being super expensive for that condominium association to have that fight and be engaged in multiple lawsuits. And in that situation, if the board just had the discretion to adopt a budget, it didn't have to be approved by the owners, none of that would have happened. So take a look at your documents. It's not common that that's in there, but if it is, I would seriously consider trying to amend that out. And then the fourth thing that I would keep in mind about the budget is transparency is typically going to win the day with the co-owners. I see, some boards say, well, you're not involved in this. You don't know what, the actual expenses are, and they do not want to share information. They don't want to say how they arrived at the budget. And I'm not saying that you necessarily need to give in to every co-owner demand that says, I want to see the receipts from the landscaping company, each month for the last 10 years. But generally speaking, you are going to get more people on your side if you're transparent in these figures, how they're arrived at, if you have a coherent presentation at the annual meeting, as opposed to just mailing out a budget or saying, here it is, or having something that's not well prepared and have the treasurer get up and, read it line by line for 2 or 3 minutes at the annual meeting. So, the key here is to try and educate the co-owners so they understand and eventually come around and agree as to what, the budget should be. They understand why it is a certain amount, even if the assessments have to go up. So, keep this in mind, that you should try and be transparent about the budget process. It's not something that should be a secret. And with that, I just say the one thing to keep in mind, I think that you can probably glean from Surfside, is what is right is not always popular, and what is popular is not, or I should say not always right. And the reason I say this is they just had a lot of infighting, if you read, the different news articles about, whether or not to raise assessments, who was going to be on the board. And, you had board members resigning because it was a difficult situation. So the key that you need to remember there is that, your job as board members is to do what's right for the association. It's inevitable that you probably are going to get pushback, and you are going to get pushback from certain owners. But I think one of the reasons why Surfside happened is that, the board kind of gave in, to the owners. They had issues with reserves that we're going to get into there. In Florida, you can waive reserves. In Michigan, you can't. So we're going to talk about that a little bit. But inevitably, when you make a difficult decision, it may not always be popular. But one of the problems they had is they just kicked the can down the road for too long. And that's not uncommon in a lot of associations, is that they pass the problem on to the next board because nobody wants to make the difficult decision. So I'll just tell you, right now that, you may have to make some unpopular decisions as part of being a board member. But that is part of your responsibility, and that's part of what you signed up for. We did have one question about what do you recommend for being transparent on rate increases based on a budget produced in November for the following year, but annual meetings are in the spring. I think the best way to do that, is obviously, the sooner you can let co-owners know, I think the better off you're going to be, just because they have more time to plan for those budget increases as opposed to springing it on them. And if you can send out a brief explanatory letter, or put that on your website that basically says, the cost of insurance increased 10% this year. We had to hire a new landscaper, and that cost increased 5%. Or we had this unanticipated repair that needed to get done, and try and frame it in terms of, we're doing this because we're required to do it under the condominium documents. We're doing this to protect your health, safety, and welfare. We're doing this to protect your property values. Those are all things that are important to the co-owners, and when they initially get this, they may have a little bit of sticker shock, but, eventually that's, I think, going to be how you're most successful in getting them to come around. So great question. And we'll go ahead and move on to reserve funding now. So in Michigan, reserve funding is required. So there's, I think, between 10 and 12 states that there's actually a reserve fund requirement. Most states around the country in a condominium, they don't even have a reserve. Florida had a reserve requirement where Surfside was at, and they're required to fully fund it for any kind of major repair and replacement unless the co-owners vote to waive it. And so in Surfside, they voted to waive assessments, or they voted to waive full funding of the reserve. So they did have a reserve fund, but they had a big gap in what it actually cost to do this project because year after year they voted to waive assessments. So in Michigan, we don't necessarily have that issue, but I don't know in reality whether we're going to be much better off. In Michigan, we have an arbitrary number that basically says that you have to maintain at a minimum of 10% of the association's current annual budget. That's on a non-cumulative basis is what the law requires. It also requires a statement to be contained in your condominium bylaws that says the minimum amount may not be sufficient for repairs. And that's one of those things I don't think most people read that warning, and it's very true. So it's just to be clear, it's not you sock away 10% every year. For example, if your budget was $100,000, and you had nothing in the reserve fund, you'd be required to put in 10%, which is $10,000. If you did not spend that reserve fund or any funds out of that during the course of the year, and next year, your reserve fund, let's say your budget was still $100,000, you wouldn't need to fund anything extra in the reserve because that's there. That's what it means to be on a non-cumulative basis. The main issue with our present law is this 10%. In reality, it's really never enough to do anything. Most people, they'll fund the minimum reserve, but they don't really have a good sense of 10, 20 years down the road, how far that reserve is going to go, what it's going to be used for. They don't necessarily have a plan. So the law doesn't require that, but we're going to talk a little bit about a reserve study and what's involved in that. But know in Michigan that we are at least one of the states that has a reserve fund requirement. I anticipate around the country that this will probably change, and the standards for reserve funding will probably change, and you're going to see some legislation. I don't know what that's going to look like right now. I know on a national level, I'm involved with CAI, and they're preparing best practices, policies, and proposed legislation to roll out around the country. But we don't have that completed yet, but I anticipate that will be coming. Great. All right, so let's just assume that you do not have reserves, you have a major repair project. The answer is to not just throw up your hands and to do nothing. What I'd encourage you to do, and a lot of people don't necessarily know that this exists, if you haven't planned out over time or you have some major unanticipated expense, is to look into getting a community association loan. So typically the way this works, or the roadmap on how this goes, is you have some major expense that comes up during the year and you have to take care of it, whether it's something related to flooding, replacing the roof, you had a sinkhole in the parking lot, something along those lines. In certain circumstances, an additional assessment is not going to be a great option because you would send, a lot of people in the condominium, into foreclosure. That's not necessarily going to be helpful in that type of situation. Additional assessments are great if everybody can afford to pay, because then you save on the interest of a loan. But some of these projects, once you get up into the millions of dollars, a lot of people don't have that socked away. So then what you can look into is a loan. Some condominium bylaws will require cone or approval to obtain a loan. I've seen it, majority approval. I've seen it 60%, even up to 70 or 80%. Other documents say the board can go out and get a loan on their own. In my view, just for the reason that I said coners probably shouldn't be approving budgets, it's the same type of deal with approving loans. I think this is best left to the discretion of the board. I've never been to a condo board meeting where somebody complained and said, how dare you go out and get a loan to make me repay this over 10 years as opposed to making me pay it all as a lump sum right now. But if you're going to get a loan, just be aware that those provisions exist, and you need to review those before you begin the loan process. Applying for the loan, keep in mind that this is really a specialty lending market. If you go to Chase Bank or Bank of America, they typically don't have products for this, and they're not going to understand it. There are several national lenders around the country, Community Advantage, CIT, Alliance, a lot of the people that will do the association banking that specialize in this, and they do these types of loans. It typically doesn't cost anything to apply. The cost of actually getting the loan is typically, $5,000-$6,000 on average, somewhere in that neighborhood. If you're approved and you go through with it, and then, you repay it, they have different terms, 10, 15, 20 years over time. And right now the interest rates are pretty good. Just so you're aware, some of these situations can get difficult if you can't get a loan. The underwriting requirements, the two biggest reasons I see community associations get rejected is one, because they have some sort of major pending litigation. Not all litigation is going to be an impediment to getting a loan, but typically they are going to look at, is there an insurance carrier involved? What are the potential damages to, would the association have to declare bankruptcy if they got hit with a judgment and there was no insurance coverage? So they're going to evaluate that and your ability to repay the loan. Delinquencies is another big thing. They're typically not going to see that you have a delinquency rate in your condominium higher than 10 or 15%. So I've had some people, we've really had to go and work on the delinquency rate and get that down to make sure that they're eligible. And so those are typically the two most important things that are going to be required, or they're going to look at in the underwriting process on the application. And then after that, the funds are dispersed. You can go out, and spend them, with the contractor and get the work done. So if an additional assessment isn't a great option, just be aware that this lending market exists. And I would say a lot of these loans are becoming more common, especially as, a lot of condominiums, started in Michigan in the 80s and the 90s. And as those start to age out and the infrastructure starts to wear out and it wasn't planned for necessarily, the loan is a good option there. And I see a lot, compared to 5 or 10 years ago, a lot more associations getting loans. All right, so let's take a look at inspections and sort of how that maybe played a role in Surfside and the different types of inspections that you can do and get. So one thing to keep in mind is that the typical thing that you're going to hear about is a reserve study, okay? Michigan does not require reserve studies. We require a reserve fund, but we don't require you to hire a company to come out and take a look and inspect the common elements. It's a best practice. I'd recommend that your association do that every 3 to 5 years is a generally recommended time frame. But we are presently not one of the states that mandate this and actually require that. So Keep that in mind. A reserve study is going to be a little bit different than an engineering report. And I think as a result of Surfside, you're going to maybe see what's included in a reserve study change. So a reserve study is basically when you hire a company, sometimes, they'll typically send out an engineer, but they do a condition assessment and determine what needs to be replaced and when of the major common elements. So they'll take a look at your roads, your roofs, your siding, anything, if you have a pool, anything of that nature, and they will say, well, we believe the useful life is 15 years out, and in 15 years, based on the rate of inflation, it's going to cost $500,000 to replace it. So, the best way to do this is to build this into your budget over time, over the course of 15 years. So in theory, you have that or something close to that saved in your reserve around the anticipated time that that replacement or repair is going to need to take place. So really what this is and what they've historically done is take a look, come up with a funding plan, a roadmap for the board. So you're getting a longer term view of assessments and what you need to do in order to be successful and avoid loans, avoid huge additional assessments. The one thing that was a little bit different about Surfside is that they actually got an engineering report that related to structural integrity. And that was a unique requirement there. It's not even in all of Florida. It was just in the county that they were particularly in because they're, on the water and the ocean there. In Michigan, I'm not aware of any counties that require any kind of building inspection. So, the building could be, 60 or at least for structural integrity. So if there's a building code violation or something like that, that's going to be a different story. But they don't have a requirement that you have to have an engineer come out and certify your building is structurally sound at any point in time. So if you had a building that was 50 or 60 years old, there's no requirement that anybody needs to come out and look at that. And in talking to a lot of the reserve study specialists, that was not something that was typically included in a standard reserve study. I think moving forward, it would be. But if you are commissioning a reserve study, you should take a look at whether that's included. If it's not something the reserve study company can offer, you may want to hire a structural engineer if you have an older building to come in and take a look at that to make sure everything is structurally sound. And that's going to be one of the things that I think everybody's going to be looking at moving forward. So as indicated, there's no continuing reinspection requirements in Michigan, but I wouldn't be surprised if that was changed by legislation as well, given what happened in Surfside and that nobody expected that. So next thing we're going to take a look at here is liability and responsibility of all the different key players. There was a lot of different finger pointing that went on here. So I'm going to kind of go over who may be accountable, who may have legal liability in all this, and what everybody's role is here. So the first and one of the most obvious things to take a look at is the role of the developer. Actually, before we hop into this, I did have a question here on reserve studies. Is it useful to get an initial reserve study to give a board a starting point for planning if the community is small and does not want to pay for a reserve study every 3 to 5 years? So the answer to that is yes. Typically speaking, the ideal time to get a reserve study is right from turnover. The developer rarely is ever going to pay for that or do that themselves. But that's going to be an important planning tool for the association to get right away. In some instances, I have seen it catch construction defects, and you typically have a short statute of limitations to pursue a developer. It's either 2 or 3 years, depending on the timing of the defect here in Michigan. But certainly, if you can't afford one every 3 to 5 years, I would, get one that, projects out, 10 to 20 years. But once again, I'd say that kind of goes back, to my starting point here is, whether this is something, you should be cutting your budget on or not, or whether it's something that you should be holding strong to and making sure that happens. Just like I typically said, kicking the can down the road and not doing these types of things typically creates a greater expense in the long run. So you may think that you're saving money in the short term, but in most cases, it ends up being more expensive, for co-owners later on. So let's take a look at the role of the developer here. You know, this was kind of a unique situation because the developer, the guy who was the principal, he was dead, is probably out of business. Most developers have shell companies. And so, you know, with the statute of limitations and trying to chase after them after 40 years in Surfside, they probably are not going to get any relief from the developer, you know, down in Florida. Here in Michigan, the things that you want to keep in mind, you know, hopefully we're not dealing with building collapses, but if there's structural issues, which I've seen, I've been in condominiums that don't have firewalls built all the way to the top, where a fire could blow through the building. Just kind of issue, you know, I've seen situations where fire suppression systems have been clogged up with glue. And so they wouldn't work, and they've led to pipe bursts and things like that. But keep in mind that there is an implied warranty of habitability here in Michigan. So what our case law says is that there's an implied warranty associated with the general common elements. So the association can enforce that. That's going to be different than the warranty disclaimers you're going to see when the individuals actually purchase their unit and the contract from the developer. There's a couple different kinds of defects. There's patent defects and there's latent defects. So patent defect is going to be something that is going to be readily apparent. You know, you're going to be able to see that there's a big crack in the middle of the road, or that the developer, you know, missed a whole section of the roof and didn't put on shingles, or, you know, something like that. Really what we were dealing with in Surfside is going to be a latent defect. So that's going to be something that's going to be hidden, that you cannot readily discover or easily discover by a visual inspection. In those situations, the Michigan law potentially allows for tolling. Our statute of limitations, as I indicated, is either going to be a 2-year or a 3-year. Sounds like somebody may not be on mute. If you guys could mute, that'd be great. So we're typically going to be dealing with a 2-year or a 3-year statute of limitations here. And what our statute says is that's the time it accrues. And so that's when you should have reasonably discovered, or when the defect manifests itself. There was a case here in Michigan, and there was an issue involving the statute of limitations regarding roads. And there was cracking of the roads, and the court said the claim didn't accrue until it actually became apparent and you could see the cracking in the roads. The defect manifested itself, even though the road had been constructed many years beforehand. So, you know, keep that in mind. Holding the developer accountable, this is one thing I've seen cost associations a lot of money, especially at the turnover time, is that they won't do anything. They don't want to spend the money. They don't want to get into a fight with the developer because they're a brand new association that has no money and they have low assessments, which is all great. But then a lot of times they will come, you know, I'll have associations come to me 5 or 10 years down the road, and then they get these huge bills for hundreds of thousands of dollars or millions of dollars for things that were not constructed properly from the get-go. At that point, it's really going to be too late to do anything, just because the problem is, you know, it's been going on for so long. So the key, as I indicated, is try and get, you know, an engineer to come out, try and get a reserve study right away, and to take care of these problems sooner rather than later. The other thing we're going to talk about a little bit later on is these anti-lawsuit provisions. So a lot of developers will put anti-lawsuit provisions in the documents to make it very difficult to sue them. And you have to jump through a bunch of hoops and get all these votes and provide special reports, and they try and make it more expensive for associations to actually sue the developer. So in those you know, types of situations, I'd recommend taking that anti-lawsuit provision out as quickly as you can. I found that to be just having that vote, it sends a signal to the developer and is a great negotiating tool, and you're more likely to actually, I think, get some resolution or get something out of them than leaving it in. So once you start crossing that threshold, the 66 2/3 vote that's actually required here to amend documents in Michigan, I'd take a strong look at that if you need to do something with the developer. All right, so the co-owners, this is, it's interesting when you read all the news articles. Everybody essentially viewed the co-owners as the victims in all of this, and they were certainly victims. But there is no such thing as a nameless, faceless board. It is composed of co-owners, and there was a lot of turnover on this board, and a lot of different people had served on the board over time. And so certainly you guys have all been to annual meetings where there are co-owners that, complain. You guys are typically paid in complaints, as opposed to, chocolates and, thank you notes and all that kind of good stuff. So they don't have a fiduciary duty. This is not a situation where they are going to have legal liability. But in my opinion, the co-owners, they're ultimately accountable for what happens there. They are accountable for who gets put on the board. They are accountable for making sure that the board is doing their job. They are accountable for paying their assessments, and actually taking time to understand things. So while, I think one of the problems in Surfside is, and it's true of any condominium, they don't have a fiduciary duty, and co-owners are self-interested. Typically they are going to be there looking out for their own interest, whereas the board members are trying to look out for everybody. In my opinion, this can really only be solved with education. And I've just seen a lot of boards, if they try to be too harsh with these people, and the natural reaction, if somebody's pointing a finger at you and they're yelling at you, is, the knee-jerk reaction is to do that back to them and to try and shut them down, and to show that you are the smartest person in the room. In my experience, when board members do that, it typically backfires. And so that's my solution would be to try and kill them with kindness. You don't want to embarrass these people. You want to make sure that their complaints have been heard, that they feel validated. And even if the annual meeting is not the appropriate forum, and this may not be the most pleasant person, if you need to take them aside or say, hey, look, I'm going to follow up with you, or have the property manager follow up with you and explain why this needs to be done or why we're making these decisions, and walk them through it, I think you're much more likely to get a better result. There's always going to be a few people that are just going to be plain difficult. But certainly I think you have a better chance of success if you adopt that approach, and try and, deflect, negativity, as opposed to, spit that right back at them. I think one of the other problems that you saw that happened in Surfside is, we'll call it apathy and indecision. These are two things that I see a lot in condominiums: just getting enough people to come to meetings, enough people to participate. They're too busy. And also just not being able to make a decision and move forward with things. And I see a lot of boards, they will get into arguments with each other about, who's right and who's wrong. But ultimately, whether somebody's right or wrong, you need to put things to a vote and move forward, as opposed to letting them linger on for years and years and years and come up with an action plan. In this situation, we're going to talk a little bit about the documents later on, but it's just with a large body, it's very difficult to make decisions. And in the situation they were in with Surfside, and actually having to get the owners to vote on a special assessment in addition to getting the loan, it just made it a lot more difficult, because you had to get a lot more people to approve it. So you should still be transparent with them. You should educate them. But in my experience, it's just a lot easier to make a decision to move forward if you have a smaller group such as the board. It's no different than, when we elect our members of Congress, they make decisions. We agree and disagree with them all the time. But just imagine if you had everybody in the United States, out there trying to vote to make a decision about, vaccines or anything of that nature. It would really be unwieldy. The last problem I would say is just, the finger pointing, and that's it's really important to have clear and respectful communication here, especially if you're the board. It's difficult to have thick skin sometimes, but I just urge you, if you're on the board or if you're a property manager, to just try and have thicker skin about this. As I indicated, a lot of these people, they just want to feel validated. They want to feel heard. And if you can respond to them in a clear and respectful manner, as opposed to, finger pointing or say, well, you're in violation of the bylaws, or to just try and shut them down and embarrass them, leave that for the attorneys. And I kind of only like to do that as an absolute last resort myself. But I'll just tell you that you're more likely to get a better response that way and actually achieve a successful project and repairs and get the money you need to move forward. The next thing to take a look at here is, certainly the board members. I would say, if you took a look at the media reports and everybody was quick, to take a look at what the board members' role here was. I think we got somebody who went off mute real quick. All right. So essentially, I think the biggest question that's going to come out of all the reports and all the research is, what did the board know and when did they know it? Was this situation avoidable? So that's something that is probably going to take months or years to figure out. But if you don't want to necessarily be in a position where your decisions are going to be under a microscope and potentially have liability for this, there's a few things that you should keep in mind as a board member. Number one is that you have a fiduciary duty. You have to act in the best interest of the association. And in doing so, it goes back to making those decisions that they may not always be popular, but it's the right decision, and it's the right decision for everyone. And that includes enforcing the documents. And so certainly you should be aware of your documents. I've seen some documents that actually have inspection requirements that you have to inspect, once a year, go up on the roof or do something like that, making sure stuff like that happens to avoid major catastrophe. So, keep that in mind, is that you as the board, if you're on the board, you have fiduciary duty. If you are sued for a decision that you do make, related to maintenance, the good thing is that we have something called the business judgment rule. What that means is that the court is not necessarily going to go in and examine that you picked roofer A versus roofer B, or that you spent $200,000 more on one roofer because you thought they were a better quality. What they're really looking at there, is, did you rely on experts? Did you rely on credible information to make a decision? And as long as you did that, then you're not going to have liability for the decisions that you made. In our statute, it allows you to rely on the advice of experts. And as long as you can demonstrate that you've relied on the advice of an expert, whether it's a structural engineer, a contractor, anything of that nature, you are not going to have liability for monetary damages for that decision. The other thing to keep in mind is that the standard of liability, that is determined by your governing documents. One of the things I think you may see coming out of Surfside is that being on the board is already a thankless job, but this is going to make it even more risky. It's a heavy responsibility, and certainly those board members, I'm sure they feel absolutely horrible about what happened there. Even though I think that they were taking steps to make repairs and to do something about it, but everybody was quick to point the finger at them. So I think that is going to make people a little bit more skeptical of serving on the board when it's already not an easy job. It's not something you get paid for, and it's not something that unless you come to our seminars, you're going to get a lot of training on. So one thing to take a look at when you're serving on the board is whether or not there's any liability restrictions. Otherwise, you could get sued for negligence, and you're just talking about a business judgment rule protection situation. Here, you can get rid of gross negligence and essentially limit it to a few intentional torts. So you couldn't essentially limit liability if you were a director and you stole from the association. But for the most part, you can limit your liability for anything that is not an intentional act. Certainly, you are going to have D&O insurance. D&O insurance, it does provide great protection. Oftentimes, it does provide a defense in the event of a lawsuit, which is great. But sometimes there are exceptions, and also there are limits on coverage. I can tell you that in the Surfside case, I think it was interesting about what's gone on so far is that in a D&O policy, there's typically what they call a property damage exclusion. And so what that means is if the damage caused as a result of damage to property or something along those lines, that there's not going to be coverage. So there's probably only coverage, and that's debatable under the general liability policy, but there's typically exclusions there that relate to maintenance. There's been cases from various jurisdictions that deal with what constitutes a building collapse and whether the whole building has to fall down or just part of the building has to fall down. So if there is not insurance coverage there, you're going to want to make pretty sure you know what your standard of liability is and you have the belt and suspenders, and that's protected. So where you're going to find that is going to be in your articles of incorporation. So I would go, if you're serving on a board, take a look at that, figure out what it says, and make sure that you're protected there, especially because I think people are going to be a little bit more skeptical of serving on a board. So the other thing I kind of wanted to examine here, and this is going to transition as a segue into our discussion on contractors and vendors here. But everybody in the media, they really focused on the report that was prepared by the engineer, and they took a look at, it said that there was structural issues, and they had these pictures of cracking and everything else, and said, well, the board, they obviously should have known that the building was going to fall down and it was going to happen tomorrow. So what I have here, this is just the last paragraph of that report that was pretty much strewn all over the media. And I'll read it to you. It says, the engineering company trusts, it says, this initial report will assist Champlain Towers in understanding the required maintenance that is needed to properly maintain the existing residential property. The engineering company is available to discuss the recommended repair work and how it coincides with owners' desires and constraints. We look forward to working with you to maintain the structural integrity of the building. After reading this as the closing and the recommended course of action, how many people would think the building is going to fall down tomorrow? Probably not a whole lot. One of the things that I think gets lost in this, and of course the engineering company was sued, is that the information that the board was relying on, there's nothing that I've read that said that this was imminent, you need to make repairs in a certain time frame. And certainly that was a communication issue. Okay, so in that situation, you as the board member, you can say, well, I relied on the advice of experts. These are the reports I got, and they didn't say that anything was imminent. They said these are repairs. But you may have a factual issue there about whether you should have done something on the information you provided. In my opinion, I think this was a communication issue with the contractor, and that the board probably could have been a little bit more clear as to what their expectations were and what the deliverables were. I definitely think in the engineering reports and studies, the engineers are probably going to be including timeframes from now on, and they are probably going to be a little bit risk adverse in the recommendations that they made. But I think one of the key things you really need to look at with your vendors and your contractors is having a good solid contract and defining what that deliverable is up front. Defining what that scope of the contract is, what the standard of care is. Are they going to do it according to a certain engineering standard? Things like that. Indemnification, if they screw up, are they going to be indemnifying the association, for their screw up? Insurance, making sure that they have adequate insurance. One of the issues, that's unfortunate about this situation is that, in my opinion, there probably wasn't a great argument for insurance coverage all around due to the various exceptions. But I think the insurance carrier said, I don't want to be the insurance company that denied this claim. And so they, kicked in the policy limits there, but that is probably not going to be the case for a, lesser tragedy or the next condominium that comes along. So, be aware of that, but at least on the vendor end, you need to make sure that they have insurance in case they caused, some sort of problem. A lot of these contracts, they may have limitations of liability or say that you can only sue for, gross negligence or intentional acts. You want to make sure that you take a look at that in your contractors, because, in this situation, if the engineer had that type of provision in there, it'd be very difficult for the association to recover from them if they screwed up. And some of these contracts I look at too, they will have a shortened statute of limitations or say that you can only sue us in 6 months or a year, or they will have a limitation on damages and say that you can only sue us for the value of the contract. So things like that, you may not be thinking about on the front end, but they can make a world of difference on the back end if something goes wrong. So I don't necessarily, recommend that you have every single contract reviewed by the attorney. If it's, something routine or a few $1,000s, but certainly if you are going through a major repair and replacement, you're spending hundreds of thousands, millions of dollars, I would absolutely have those types of contracts reviewed by the attorney, because I see too many people come to us on the back end where they didn't have us review the contract and say, can you get us out of this situation? And it's a lot more difficult as opposed to negotiating these things up front. So the municipality, this is going to be an interesting one because a lot of people, I think, have a false sense of security that said, well, it passed the building code, so it must be okay. Or, the building inspector has come out and looked at it, it must be okay. What I have here, this is an excerpt of some of the meeting minutes from actually Surfside. And there it said, Mr. Ross Burrito, the building official, he's presented by Mara Chula, one of the board members, to discuss 40-year certification. Structural engineer report was reviewed by Mr. Burrito, and although the report was not in the format of the 40-year certification, he determined the necessary data was collected and it appears to be the building is in very good shape. Okay, so at least they recorded that, put that in their meeting minutes, that this is what the building inspector told them about the building. So the question is what kind of responsibility or role that the building inspector or the municipality is going to have here. And this is true in Florida. It's unfortunately true in Michigan. It's not much. And so, for building code violations, for the most part, Michigan, those are going to be covered by governmental immunity. There's a few minor exceptions to that. But essentially, they're going to say, well, it was the contractor's fault or somebody else's fault. The reason that there was this damage there, the primary cause of that, it wasn't the building inspector's poor inspection. It really came from somebody else. And that was the direct cause. And therefore, the municipality is covered by governmental immunity. So the moral of the story there, and I hate to sound cynical, is I wouldn't put it, too much stock in what the building inspector says or that there has been an approval, just because in this, particular circumstance, they're probably covered by governmental immunity. And you can tell that the board, I think probably part of their decision-making process was governed by some representations that were made at that meeting, in addition to the engineering report and probably the lack of urgency communicated by the engineer. Last thing I want to talk about here before I get into the final tips is just for a few ideas to take a look at for document amendments. As I indicated before, things that you should look into removing to avoid this type of situation. You can take out the cone or loan approval provisions. I think that will go a long way, that the board just needs autonomy to do this. As I indicated before, never really had a coner come to a meeting that says, hey, you took out a loan, as opposed to assessed me a huge assessment right now. And so I think if the board would have had a little bit more authority here to just go out and get the money, they may not have ended up in this situation. And then the anti-lawsuit provisions about actually holding people accountable, because people that can be held legally liable and accountable, I think are more apt to do a better job and or to fix things and do things right. People that are not, they have, I think, more of an incentive to fly under the radar and not do the right thing. Ideas that you could add to your documents, requiring reserve studies or structural engineering inspections. While it's not required by our statute, just given the rotating nature of the board and lack of institutional knowledge, I think is one thing that a lot of boards suffer from, just due to the high turnover rate, is actually putting it in there that, every 3 years, every 5 years, you're mandating a reserve study. And then when people complain about why you put that in the budget, it's in your documents and you have to do it. Taking a look at the structural engineering inspection, setting that probably for a longer time frame, but mandating those things. So it's not an optional budget item. The board doesn't have discretion. So that way all the co-owners know that these problems are being addressed, looked at, taken care of. The other thing that I'm a big fan of, I like to see legislation proposed to this effect, but increasing the reserves if you don't have an inspection. Essentially, if you do the right thing, with that, and you get that information, I think you're going to be better off. For people that put their head in the sand and ignore situations, you're more likely to have a problem. So if you're not getting the reserve studies or any type of building inspection done, so this is something I don't know that everybody would want to do, but it'd be one option you could put in your documents to mandate that your association have something besides the required minimum to avoid this type of situation. The other thing that is sort of looked at is having minimum insurance requirements. Our statute is very bare bones here. It just says you have to have a general liability policy. It could be $50,000. If the building collapsed, then you're kind of sunk. And so largely what insurance is required and how much is going to be totally driven by your governing documents. So I think that's a good thing to take a look at, just because one of the things that came out of this, even though the carriers put in a pool of money, is that everybody's basically saying, for the cost, for the loss of, to life, property, all that, the amount that's actually kicked in, it's not going to be enough. And so that's one thing, that the judge there is going to have to divide up that fund and have a certain amount for funeral expenses and divvy that up. And that, it's one thing you want to take a look at in your documents. All right, so I'm going to kind of just go through my final thoughts here and action items, and then I can wrap up with taking any questions that you want. I think one of the biggest things that really needs to change, it's just the culture in condominium associations. And this is something I think it's just going to take, over time. And I've been to a lot of different associations and everybody's different. But the ones where I see the most problem is this whole us versus them mentality, when, you're having heads butt between the co-owners and the board all the time. And the board trying to wield their power to, shut down certain co-owners. And I think just the infighting and the lack of civility in a lot of these associations is something that's, it's going to have to change to address this type of issue. In my opinion, I think it's just a societal thing that compared to 10 years ago, I think a lot of the condominium meetings that I go to are probably more contentious than they were back then. But as board members, you guys are the ones who are going to be the ones who are going to lead the charge on this. And it's not always easy to take the first step and sometimes be the bigger man or the bigger woman, and it's not always fun, and you may take a lot of heat for it. But I think that is going to be one of the keys to kind of changing this, because if you look at a lot of the media reports too, there was just a lot of snarky emails and letters that went back and forth, and you didn't really see a culture where everybody was trying to work together on the same team to solve a problem. And when you have people working against each other, your odds of success are much less. So I think that's just one big thing that is going to have to change in some condominiums. The second point is that low assessments are not a badge of honor. One thing that just annoys me is I see that they'll go out and they'll compare their assessments to the 5 communities next door and say, hey, look, we have the lowest assessments in the whole city, or this whole area. And it has no comparison to what their financial responsibilities are, the common elements, how that's made up, the age of the condominium, any of that. And so, really what I'd like to see people say is the badge of honor is I levied a sufficient assessment to successfully operate my condominium association. And that's the way it goes. But everybody gets caught up with trying to keep assessments as low as possible. And until, people stop running for the board and realizing that, trying to keep assessments as low as possible, you're actually creating a long-term problem and creating more expense in the long term, as opposed to trying to do things the right way. So I think that's another big thing that has to change. And I understand you will get a lot of pressure from the owners, but a frank, honest conversation is the way to go here. Be proactive. I think one of the main problems in Surfside is that they were reactive to what happened, and then if they had maybe gotten this going a couple of years earlier, we wouldn't be sitting here talking about this. That includes having the reserve study, getting it done every 3 to 5 years, getting a structural engineering study every 10, 20 years, making sure that you have an appropriate budget. So you're not sending out a letter to the co-owners to say, hey, we need to impose a $15 million special assessment. creating sufficient reserves over time, actually using those tools to spread out these costs so it doesn't create such a huge short-term burden on the co-owners. Do not ignore problems. I see that a lot of boards, they will put their head in the sand, or they'll say, well, we don't have enough money. And the reason they don't have enough money is because they choose not to have enough money, either through poor planning or assessment. If something does arise, don't just ignore it, because it will usually create a worse problem. You got to come up with a plan. And additional assessments, they're not fun, but that may be the way to go, or get a loan. But make sure you address it and don't kick the can down the road. Hold vendors accountable. And so I see this a lot of times, is that vendors, they will not have great contracts, or they won't perform to their contract, or there's not clear communication as to what the expectations or the deliverables are. And I think here, I don't think there was great communication with the engineer as to what he was supposed to deliver, when he was supposed to deliver it. And I think that played a role in what happened here. And so even if you're trying to fix this stuff and prioritize it, I think that's important to really stay on them. And that all starts with a good contract at the beginning of it. So, it's real easy if you're in a hurry at a board meeting just to sign what's, shoved in front of you. For some associations, we've made just standardized terms that get attached as a rider and override anything in the contract, so the association is protected. So that certainly would be an option. I think that's going to be another key here. And last, but not necessarily, least, is have an emergency plan. One of the things I don't think it was talked about a whole lot, but was, I think, a positive from Surfside, is they were able to account for everybody. They had a pretty good handle on who was in the building, who wasn't, that kind of thing. I see too many associations that you're required, if there's a lease, you're required to say, who's in there, but at least make sure that you have a plan. You can account for everybody. If the police show up and, there was an explosion in your building, to be able to give them a roster, to have an evacuation plan, to show how that works, if there's, some sort of an emergency. Most associations that I know, they don't have this right now, but it's something that they should certainly develop. It's going to look a little bit different for every condominium, depending on what the layout of that is. But that's going to be an important thing to make sure that you have in place, if everything goes wrong, that you're at least prepared to deal with that, as opposed to completely disorganized, not knowing who's in the building, people not knowing how to get out of it, that kind of thing. And then finally, review and update your governing documents. So we went through the things that should be added and removed. But I see people that they take their documents, they're there from the developer, and they don't bother to update them based on changes in the law, based on major events such as this one. So think about this and updating this, because that will help make your condominium easier to operate. And I think that's going to be one of the big keys here. So that's what I have for you today. So I appreciate everybody logging on. And if there's any questions, feel free to unmute, and I can do that before we wrap up here.
I have a question.
Sure.
Would you talk a little bit more about reserve studies? Our complex has not done one. We're the one that's very small. It's 29 units. And like, who does them? Are it special companies that do them? And is the expertise, of course, I'm assuming, far beyond what a board member would be able to plan ahead? Or is it that they can give you specific projections, or what's so great about them, I guess?
Yeah, so it's very specific projections. So there's not a lot of companies that do it here in Michigan. If you go to the CIA Michigan website, they have a vendor directory, and they have about 3 or 4 companies that do reserve studies on there. I think 3 of them are national companies, so they travel all over the country doing this. I think a lot of their Midwest operations are out of Chicago, but that'd be the starting point. I'll just tell you, I've been in a ton of condominiums. I'm not qualified to do a reserve study. I'm not an engineer. I mean, I can just generally being involved in construction defect issues. I mean, I can know enough to be dangerous, or can spot something when it's a problem. But, I could not tell you, exactly what the problem is. If I saw it, I couldn't tell you how long the useful life is going to last for. I could not tell you how much it's going to cost with inflation, 10 or 15 years from now. I mean, I went to law school, so I didn't have to do all these complicated math calculations. So, that's really going to be best left, for the engineers and accountants. And I mean, that's what these companies do for a living. And it's kind of, with anything, in your condominium, you get what you pay for. And so I understand, I mean, and that's kind of the theme, is nobody wants to pay extra money. I mean, and nobody wants to make the condominium, completely unwieldy. But, that's just, it's a fact of life that you're going to have to do. So there are, like, through CI, there is a credentialing program. So there's actually people that can get certified to do that. It's called an RS credential, as Jessica pointed out. Thanks, Jessica. So look for somebody that has that, because they've actually been, certified as somebody that has done enough of these, studies